Look at what the market has settled in at, and we're pretty much the same actually on the index. Haven't really moved much. Oberoi Realty has picked up a little bit more. We're holding up about almost 5.5% as we speak right now. Tata Chemicals, that's looking smart. A good 2.5% jump up on that stock too. And Cipla is right in the pole position on the index, almost a 4% bump up on the futures. Bharti has ebbed off a little bit, started off okay after its numbers, was well in the green. And now we've eased off from where it started off. Tata Motors, Hero Motocorp, Hindalco, Tata Steel are all names which are looking good right now. But Ajay Srivastava, he joins in on the show right now. Ajay, hi, morning. Good to have you on the show.
Morning.
Tell us,
Thank you very much.
hi, how is it that you've been wading through the current market volatility?
Oh, it's been most enjoyable. I tell you, it's the most enjoyable one because the same themes come back and give you the return that you desire. Every time there is a risk off in the market, gives you an opportunity to pick up what you missed out or you want to add, given the new money is flowing in. So market is not doing anything different than what it did last year. The same theme, whether it's a defense, whether the shipyards, whether it is, the infrastructure sector, all are delivering. And I think we don't need to experiment beyond that. The theme which did not work, the QSR, the multiplex, and the consumer companies, they are not performing as we see right now. Therefore, all in all, I think the same theme continues. You got to stick by what you're doing at this point of time, and it's going to give you returns. We saw what happened in Korea yesterday with the shipyard company, astronomically priced up in the market compared to our shipyards, and you saw the movement. So I think infrastructure remains the theme of the year as far as we are concerned. There's no need to pivot out of it. And if infrastructure is there, as we said, metal will continue to be with you. So base metals, commodities, and infrastructure, I think you are done. And if you look at airlines and hotels, it's such a comfortable place. You really don't want to go to work nowadays.
But you were still late. You're still late by 5 minutes.
Saying, no, you don't want to go to work.
But if
I
he's home,
told
he
you
should have been on
don't want
time.
to go.
This is having a chat. This is not work. That's why I try to.
I know, I know. There is a technical problem with your guys' invite. I don't know what happened. It just stops video and audio pop in one of my computer systems. So we need to solve security issue. I don't know why it's happening, but we're going to sort it out.
We need to sort it out. Okay. So Ajay, what is that election trade in your book?
See, the election trade, if it is, I would say the first trade, you to keep your infrastructure stocks going. You don't need to sell them out. Even if there is a wobble in the market, let's assume there's a wobble in the market given what election trends are, and you might not see what is coming to be a humongous majority, let's assume for a minute or whatever it is. I think your trade in infrastructure remains because modernization of cities, railways, power lines, everything continues. So don't need to change that trade. And that's done really well for the investor in the last 1 year. I think the second trade, which might come out, if you ask me, is personally is going to be again back to the power finance companies. I think they should be a big winner post the election if things happen. So you need to, if you don't have it, you add it. If you don't have it, you add on to it. If there is a major, I think, upset in terms of number of voting power and so on and so forth, I would really pump in for two-wheelers because I think the entry level price for two-wheelers and cars is going to be one of the big factors which will be in the government's agenda as it goes in because the economy is where it is, 6%, 6.5%, 7%. And this is one sector which has not grown. And therefore, I would say autos, tractors, and low entry cars. I think these three should be the one, if you're not there, to add up because they should get a direct benefit of the new government coming in. And if there is, let's put it this way, less than expected voting in favor of the ruling party.
Okay, Ajay, morning. Given that we're talking a lot about the overall election outcome, do you think that the political continuity is a little bit uncertain at the moment, or do you think that it's pretty much going to be priced in? And what is going to be the market reaction and correlation?
We have seen so many elections in my life, and I never, saw. In fact, any wobble gives you opportunities. If you remember it, in the first time the Congress came in, the market went down, and then you bought in, and then you made good money out of it. So, to an extent, and it doesn't matter which government. I'm not sure this government will definitely come in, looks like, but it doesn't matter what government comes in. The compulsions remain the same at the end of the day. And I think if the compulsions go towards giving relief on education, health sectors to the lower end of the society, it's a great benefit to us in terms of getting a labor force up. The biggest challenge we have is poor labor force. So I don't think one should, look at investment decisions based upon which of the government, if at all there is a change, if 1%, 0.1%, anything can happen in the world. happens, you don't need to change your investment philosophy because projects run over time. No government can come and stop the project. Electrification of railways, the cover scheme safety, they will keep running. They can't be stopped by the government. So I think impact is going to be very limited in terms of if there is a wobble in the government. Yeah, sure, stock market will love to go up and down. But keep your theme. I don't think we can take away the theme of the market. It's going to be infrastructure, airlines, hotels, commodities, and two-wheeler. I think that theme continues, and we don't need to worry. And the next beautiful theme coming out is the domestic IT companies. I think they will do very well given what's happening in banking financial space. So there are a few IT companies which will position themselves very well. And one doesn't need to get out of the capital market space as well, whether it's the depository companies, whether it's the AMC companies. I think you're in a good space. So elections can change some perspective, but I don't think elections change the fundamentals of investing or the economy. So let's not worry about elections. Believe me, just focus yourself. In fact, take a holiday if you want on the election, the June 6th or whatever the date is, and you'll be better off handling your portfolio.
June 4th, Ajay. But unfortunately, we can't take a holiday. You surely can.
It's your peak one.
But tell me, you were just talking about IT companies, and given that each of them has their own niche, tell me which IT services companies do you think is going to win the battle here?
See, I think if you ask me, the domestic smaller IT companies, we had one result yesterday not recommending like an Aurionpro, which is domestically focused company in the BFSI sector. I think such entities, there are about 7-8 companies in India which are doing good work with Indian companies. There's a company which does for income tax, handles the entire income tax filing and assessment of yours. It's a local Indian company. So I think these kind of companies will do very well in the market because they're entrenched in Indian banking sector. The cost is low. And for a TCS or an Infosys to pivot into Indian banking sector where contract size is low is going to be very difficult. So I think our bet is, given what's happening in the RBI sector, the 4 or 5 domestic IT companies will do very well for the next 3 to 4 years, and quite distinct from what happened in the US market and the bigger IT companies. So these smaller linked to BFSI space, I think are a good bet if you ask me in the domestic sector.
Ajay, so which are some of the large stocks where you would say, if they fall on the election day by 15%, I'll buy them. If they fall 20%, I'll buy more. And if they fall 30-40%, I'll double them up. Which are your 3 high conviction ideas, irrespective of the election cycle?
See, okay, we have the holding, so I don't want to propose anything. But if you ask me personally, ABB, Siemens, Indigo, Indian Hotels, and Hero Moto. I think among the top 5 our holding is. These are the 5 we would definitely buy. And you're saying if 30-40% fall, they're a sure buy. Absolutely. So, and these are companies which are large, which perform well, good pedigree, and good linked into the economy. So I think one would tend to be with these kind of companies which are almost monopoly.
We got his top ideas already.
If you like this video, then like, share and subscribe to ET Now.